Hello, good morning. This is Alice Lind and I welcome you for my today's webinar. And as always, I would like to start with asking you to put pluses if you can hear me well and if the picture on the screen is clear. So let's wait to see how many people are here and if you can hear me well. Okay, we've got several pluses and traders are writing that everything is okay. So let's start. Today I wanted to talk with you about the time frames and the method how we can use them. What is generally the time frame and what time frames we can trade on the platform that I'm currently working and I'm currently using, and I think that most of you are using as well. So the Finmax's platform allowed traders to open different time frames, to open the trades for different period of time. The shortest time frame that is given here, it's 30 seconds. So basically, it allows you to open really short-term trade and make money on the smallest fluctuations of the market. Time frames up to 5 minutes, they are considered to be short-term. And trades that are opened using these time frames, they are considered to be like the turbo trading. Because this period of time allows you to open a lot of trade within like short periods of time. Let's say you have 15 minutes to trade, and using these time frames you can open one trade after another and at the end receive really good results. As you probably saw on my trading webinars, within 1 hour I have an opportunity to open around like 30 trades or even more. In order to pay attention to all of them, in order not to forget about them, I write down each trade that I open, and at the same time I'm trying not to open that much trades as I can. But if you are trading yourself, if you are like not on the webinar where you need to show successful trading, you can consider yourself what assets to use and how many trades at the same time you can open. For the analysis of this really short period of time, we are using corresponding chart. So currently here I have the chart for 1 minute time frame. Here is the mostly commonly spread asset pair euro to American dollar. So each candle on the chart shows changes in price for this period of time. So this is 1 minute, this is 1 minute, this is 1 minute, and so on. So based on that, I know where the market moves within 1 minute period. If let's say we switch to 4 hours time frame, here we will have another picture, another market, and of course the direction can be opposite. So here we had on both 1 minute time frame we have the uptrend, and on 4 hours time frame we have an upward trend. If we switch to let's say 1 week time frame, we will see that the trend changes for down. So based on that, you can understand where globally the market moves, and what time frames, what analysis you can make in order to open some trades, in order to make money on these fluctuations. So let's say if I trade within 1 minute, within a short period of time, it's more profitably for me it would be to open the trades for high. But when it deals to longer period of time, I would open the trades for low. Let's switch to 1 month. The same here. So currently we see that the market moves up, because within the last 3 months the direction was the market was moving up. But globally we will see that the trend is moving down. So based on that, we can make different analysis, and we can use different approaches for trading. And these time frames, it's a trader's friend, as basically they tell us what to do, what period of time to make an analysis, and for how long we should open the trades. So we spoke with you about short period of time starting from 30 seconds up to 5 minutes. So here on the platform you see the expiry time. Please pay attention exactly to the expiry time, because sometimes if you open the trade, let's say here it's written 5 minutes, but the expiry won't be straight after 5 minutes. The expiry will be at 11:14 my time. Currently I know when my trade gonna expire. So it gives the trader a lot of opportunities, and it gives the trade understanding when the trade gonna expire, and of course an opportunity to check each trade in order to understand. Let's say I have here this time frame, and I know that exactly at 11:15 my trade gonna expire, so I can check it on the independent source to make sure that everything is correct, that my analysis and the platform works perfectly well. After that we have a bit longer time frames, starting approximately from 10 minutes. So here I also see the exact expiry time, 11:20. So it's gonna be like in a bit more than 10 minutes my trade gonna expire, in 10 minutes and 15 seconds. So I exactly know when it's gonna expire, and then when I'm checking it on, let's say, TradingView, NetDania, or on Investing, I can check everything. I can make sure that everything is correct. So that's important, because you know that the expiry prices, they are the same. Also, let's say from 10 minutes up to the end of the day, the trading is called intraday. So let's say that the latest expiry time is at midnight my time. So the longest trade that's gonna be for the intraday trading will expire straight at 12 my time. So if I make a bit longer term analysis, I can use this in order to understand. Hold on. in order to understand when my trade gonna expire and what analysis I should use in order to trade. So here we have the intraday trading. Here we see that every trade, here it's written like it's gonna expire today, and the last one tomorrow. Basically it's between tomorrow and today, straight at midnight. After that, we have the longer time frames. Let's say May the 12th, May the 19th. That are the current contracts that are offered on the platform. So you can choose between them. And when you are making a long-term analysis, it can help you to understand. Let's say when it's easier for you to analyze the market on the long time frames, when you are analyzing the market globally, it's better for you to trade on the long time frame. So let's say I think that in half of the year, after 6 months, the price for euro will grow. So in this case, I can choose between these time frames, long-term time frames, in order to open the trade and to make money on that fluctuation. So sometimes we also can open the trades due to some fundamental factors. Let's say we are checking the economic calendar, and or we are checking the news, and we know that, let's say, in 2 weeks the Mario Draghi are going to speak about the changes of their policy, about the changes of the monetary policy of Eurozone. So, and I'm sure that his speech will cause the falling of the euro. So in this case, I can open the long-term trade and make money on that. Also, there are these opportunities. They can be implemented to the commodities. Let's say I have gold. Let's see what we have on the chart for gold. So currently, 1 day time frame shows us that the gold is on its loss. So the price wasn't like that since the 6th of March. So it's on its 2-month lows. So basically the price is pretty low. So when I see this time frame, when I see this chart, I may say that the gold is pretty low. So for the several days or even several weeks, I estimate for myself, for my trading, the opportunity for gold to go up. And I can open the trade that will expire, let's say, at the second half of the May for the growth of this asset. Usually, on the longer time frames, traders prefer to invest more per trade, because this analysis is easier to make, and it can bring much more interesting results. Besides, some traders, they don't have that much time to trade. They cannot open positions. They cannot enter the market using any event in the market. So in this case, the long-term trade can the long time frames can be really useful for them, because they can open one trade like for 1 week, and in 1 week they are going to get results. The same situation is when it deals to trade in stocks. Let's choose some asset, let's say Amazon. So we see that on the really long time frame, the Amazon is on its peak. the price wasn't that high, never before. And we see that the trend is up, is moving up. Let's switch to 1 week time frame. So we see that within the last several weeks, the price for Amazon was going up and up. So the trend is pretty positive. If we switch for 1 month, we will see the same. So, but basically here a bit another picture, because on 1 month time frame the Amazon broke through the up trend line. So if to analyze from this angle, there is like some probability that the market will change its direction. Besides, currently the price is on the maximum of the previous price of the previous month. So we can see that in the previous month the candle had a long tail, a long shadow. So it may tell us that buyers, they are losing their force, they are losing their strength, and there is the high probability of change in the trend. Let's switch to Tesla and indicator. We are going to use today only the trend indicator. It's more than enough right now. Okay. It doesn't show for some reason for 1 month. So okay, we will use 1 week time frame. So right now we see the changes in price for 1 week. What we see right now, we see that there was a significant growth of the stocks, Tesla stocks, from 244 up to the highest price was 327. Previous week, the price changes significantly. So we see there was a high volatility. We see that this candle has both long down shadow and up shadow. And currently the direction of this asset, the direction of the price has changed for the opposite. So right now the market moves down. So basically it allows us to understand that within the longer time period the Tesla stocks may go down within like 1 week or 2 weeks. It gives us an opportunity to open the trades for the longer period of time, not to spend so much time to trading and make money on the longer fluctuations. So within 1 minute we see that it moves down. Here let's say we have 1 hour time frame. We had here a gap because here we see that the earnings result published. Gap for down. After that we see the correction. It broke through the lower line and started to move up. Currently it's reflected from this angle and started the down movement. So both within like several hours time frame, intraday trading, and longer time frame, this analysis allows us to understand that there is high probability that the stocks are going to go down. Also, let's see the situation on Apple. So currently the market is closed, and what do we see here? we see the strong up trend, and it broke through the upper line of the upper trend line, and after that 2 hours the Apple stock before the market was closed were moving down. So let's switch to, let's say, 1 day time frame. We see that there is like strong probability of further movement, but when we switch to the even more longer time frame, we see that it's the highest price that has ever been. So right now we may wait for the fundamental factors. They may influence the market. So how we are using that? Within, let's say, several hours time frame, we can open the trade for high or for low, I'm sorry. But when it deals for, let's say, 1 day time frame, there is the probability that it will keep going up. And after that, within 1 week time frame, we need to wait for the, basically I would wait for the next candle to appear, and only after that I would open the trade for the longer period of time than several days or intraday trading. The same as with the currencies. Let's switch to let's say this asset. So we see that within the last several weeks the British pound was going up, but after that and currently it's moving down. So this week results, the result that we currently have, it's negative for the British pound, the slowdown in the growth and even opposite movement. Let's switch for 1 day. Within yesterday the British currency was falling to American dollar, and right now it shows insignificant growth. Here we see that within the last several days the British pound to the Japanese yen, it reached like its peak within pretty long period of time since the December of 2016. So it's on its peak, and basically it tells us about the strong probability for opposite movement. Let's say on 1 hour time frame we see that the trade for low can be open within that limit. 4 hours time frame, well, nothing here that would tell us to open the trade for longer than several hours for low. Okay, let's switch for 5 minutes. So here we see that within the short period of time the British pound broke through the upper line of our short-term trend, and right now it was moving down, and right now the market is pretty unstable. We can see it also on 1 minute time frame. It reached the lower limit for the current really short-term trend. And what would we say if we saw this picture? So if we trade on 1 minute, we can open the trade for high, but when it deals for trading, let's say for 1 day, well, 1 day is not that clear, 1 hour, so in 1 hour limits it's better to open the trade for low. So we see here the opposite results, but when you're opening that trade, both of them can expire in the money. So in our hands these time frames, these different time limits allow us to use different approaches for trading and use different tools for trading. So if you don't have much time to trade, of course, you can choose both as short time frame trading, medium range, and long term, based on how much time you can spend trading and what analysis you can proceed with, what analysis you can make. But so when it deals to short period trading, so-called turbo trading, I believe it's more suitable for the big accounts, first of all, because within 1 or 2 minutes time frames, the market is really volatile, really unstable, and it changes all the time. So basically, you need to cover, to overlap sometimes, and it can result like that. For one asset, for one direction, you need to increase the investment per trade several times. But when it deals to longer time frames, you don't need to trade so often, you don't need to pay so much attention to the market. You open one trade, you made an analysis, you think that the price will go up, you open it for 4 hours, let's say, it expired, you entered again the trading platform, overlapped, and doing your business without paying much attention to your trade. After that, you opened the chart, you open the trading platform, see what's going on there, and take your decision. What's about the longest time frames? It's I prefer to use them for trading on commodities and stocks, because first of all, commodities such as gold. Gold is of course, that's the asset that commonly used for like a safe haven, because when something is not clear in the world, most investors pay their attention to the gold. When they prefer more risky assets, price for gold loses its strength and it moves down. But when it deals for the pretty global, let's say 1 month, this asset is always interesting, and currently it's really underestimated for most traders, so it has the strong potential for moving up due to several reasons. The same with the stocks. They are influenced mostly by the factor when the earnings results are published, and of course some events from the company itself, some lawsuit or some negotiations, or when the company is bought by some other company and so on. So the factors, they are not that numerous, and it makes the process of trading more easier, and it reminds more the gunshot trading, when you open the one trade but you know that it definitely expires in the money due to some factors. Our analysts, they usually make the long-term overview of the market, long-term analysis, in order to understand globally what can happen with these or that assets, and it helps to understand the picture itself, the picture of the market. So basically that's all I wanted to tell you, and if you will come up with some other questions, please write them to your managers, ask them to your managers. Those traders who work with me, you of course you know that you can ask directly me, and I will give you the answer about the questions that you have about these time frames and about the assets, what asset it's, what time frame is better for this and that asset. Okay, so currently I will say goodbye to you, and as usual I would like to invite you for the Thursday's trading webinar. I'm planning to open the several positions both for short-term trading and let's say for several weeks trading, in order for you to see how it all works. And meanwhile, I thank you for your attention, for your time, and wanted to wish you to stay in the money. Bye bye.